Welcome to The Explainer. Today, we're going to unpack a really interesting analysis from Barron's. It's all about a company that's making some serious waves, and I mean big waves, in the travel industry.
All right, so the travel boom is definitely here, right? We're all feeling it. But which company is actually sailing ahead of everyone else? Well, the Barron's piece we're digging into points to one clear leader, a company that's handling this post-pandemic surge so well, it almost feels like they have an unfair advantage.
So, first things first, let's just set the scene. It's no secret, right? After being cooped up, the demand for travel hasn't just bounced back, it has absolutely exploded. People are just desperate to make up for lost time. And a huge chunk of that demand, it's going to cruises. The Barron's analysis makes it super clear. Cruising is one of the hottest tickets in town right now. People are flocking back to the open water like never before.
So you gotta ask, why the big comeback for cruises? Well, a huge part of it comes down to one simple, powerful word: value. When you break it down, a cruise often gives you way more bang for your buck than your typical vacation on land, and that's really driving this strong demand from consumers.
And hey, the proof is in the pudding, right? Just look at this. The big three, Royal Caribbean, Norwegian, and Carnival, they've all been riding this wave and their stocks are actually outperforming the rest of the market. But, and this is the key part of the analysis, one of them is pulling way, way ahead of the pack.
Yeah, the Barron's piece is super direct about this. They basically crown Royal Caribbean Group as the undisputed gold standard of the entire industry. No beating around the bush.
And get this, here's the one thing that really, really separates them from the rest. While its main rivals are still just trying to get back to their 2019 levels, Royal Caribbean has already blown past its pre-pandemic highs. I mean, that's a huge deal, a massive differentiator.
And it's not just about the numbers today. What's really telling is how the experts are talking about the company's future. Take this quote from Milius Research. They call it a compounder. Now that's basically Wall Street talk for a high-quality company that can just keep reinvesting in itself and growing over the long term. Think of it like a snowball rolling down a hill, just getting bigger and bigger and bigger.
Okay, so this kind of success, it doesn't just happen by luck, right? So how did Royal Caribbean pull this off? Well, according to the analysis, it all comes down to a really smart, deliberate strategy. Instead of just hunkering down during the COVID shutdown, they saw it as an opportunity. They poured money back into their fleet, getting the newest, best ships out there. Then they kicked the experience up a notch, adding cool stuff like private beach clubs. And they didn't stop there. They're now branching out into new areas, like river cruises, and even chasing new partnerships. It's this all-at-once strategy of upgrading, enhancing, and expanding. All right, that's the strategy. But does it translate to the bottom line? Let's get into the numbers and see why analysts are so bullish. And the verdict from Wall Street? Yeah, it's pretty clear. We're talking over 70%. That's more than 7 out of 10 analysts who cover the stock are saying buy. And their average price target? It suggests there's still a lot of upside left. And what's fueling all this optimism? Just look at the growth. For this year alone, earnings per share are expected to jump by nearly a third. That's not just a recovery, that's explosive growth. It really shows their whole strategy of getting newer, more efficient ships is paying off in a big way. And this isn't just some one-hit wonder either. The momentum looks like it's going to keep going. They're forecasting over 17% growth in 2026. And that is exactly what long-term investors love to see. Not just one good year, but a real pattern of strong, sustainable growth. It's that sustained growth that has some analysts setting some really ambitious price targets. The analyst from Milius Research we mentioned earlier, he thinks all this performance justifies a price of $385 a share. That points to some pretty significant upside from its recent price. And you know what's holding all this up? The company's financial health is getting so much better. Their debt is getting back down to a much more manageable level. And why does that matter to you? Well, it means they're going to have a lot more free cash flow. And all that extra cash could mean good things for shareholders, like maybe even stock buybacks down the road. So, when you put it all together, the Barron's analysis really leaves you with one big question. By investing when others were holding back, by upping their game with new offerings, and by getting their finances in order, has Royal Caribbean basically created a lead that its rivals just can't catch? It's a really compelling question and something to think about for anyone keeping an eye on the travel world.